Welcome to the Market Frontlines. I'm Lyndsay Malchuk. One of the advantages of following this market closely is knowing which analysts consistently do the work when others simply react to the price. When valuations diverge this far from reality, it often takes disciplined research to explain what the market is missing. Now, a familiar voice to this audience is Matthias Greiffenberger, Senior Analyst at GBC AG Investment Research. Matthias has joined us many times to unpack valuation gaps, asset quality, and catalyst-driven opportunities across the resource sector as a whole. Today, we're revisiting his latest work on Desert Gold Ventures. Matthias, it's so great to have you back. I'm so excited for this conversation.
Yes, it's great to be back. Thank you for having me.
So right off the bat here, let's dive in. Your analysis once again highlights a significant gap between Desert Gold's current market capitalization and your calculated net asset value. So this is not a subtle discrepancy. When you look at this level of disconnect, do you see it as a failure of market understanding, a penalty being applied to jurisdiction and development stage, or is it something deeper about how junior gold assets are being priced in this cycle?
Well, I think it's multiple factors, not just one. And if you look at a lot of different junior companies, many trade below the net asset value. And especially the ones in Mali, they are heavily discounted. And if you look at Desert Gold, they are discounted despite being low cost. And they already have a great PA out. So I think most of the market is currently ignoring this future upside, and they don't even look at the PA and the Côte d'Ivoire asset at Desert Gold. So Desert Gold, in my opinion, is heavily priced as an exploration company, even though it's already steps ahead of that.
And that's the thing. I mean, what stands out in your work is that Desert Gold already has defined development path through that SMSZ project, including, like you mentioned, the complete PEA. Yet the market seems to treat the company as if they're purely speculative. So in your view, I mean, what specific elements of that project should be commanding more attention from institutional and even more so sophisticated investors right now?
So in my opinion, Desert Gold has strong junior level economics, and they have already a PA out, and the mine plan does not include all of the gold. It only includes a fraction of the known gold, and there's 1 million ounces outside of the PA. So there are two big value drivers already, and it's very simple, very low cost, and the mine can be built in stages. So there's a lot of upside, and if you look at the current gold price, that does not reflect the value of Desert Gold.
That is so true. Now, at the same time, your report places real weight on the Tigba project in Côte d'Ivoire, particularly given that it remains largely undrilled. So from your analytical standpoint, how do you assign value to exploration potential of that scale? And further to that, what early signals would tell you that the Tigba is evolving from conceptual upside into something the market can no longer ignore?
Well, it's true. At the current time, the value is only because of the probability of gold, not ounces. And but there are large soil anomalies, so that implies a lot of scale. And the first bedrock drills, they will really indicate if there's gold or not, and that will surely shift the perception of investors. So in my opinion, the early results will really re-rate that asset quickly.
So your valuation framework then also assumes a gold price environment that remains supportive, but not euphoric. So if gold continues to trade at elevated levels, how sensitive is Desert Gold's value in incremental increases in the gold price? And at what point does leverage to gold begin to meaningfully reshape the investment thesis?
So if gold keeps rising, the leverage on Desert Gold is immense. But if you look at the PEA, they have already a successful PEA and net asset NPV at way lower rates. I think it was 2,800 was one of the lower ones. So we are currently above 4,000. So Desert Gold is really priced at different market prices of gold right now. So yeah, the market really needs to re-rate Desert Gold at this time.
Absolutely. I can see your point on that. Now, you have covered multiple development and exploration stories across West Africa. So when you compare Desert Gold to peers operating in similar jurisdictions, what differentiates it structurally in terms of asset optionality, capital efficiency, or strategic relevance to potential partners or acquirers?
I think Desert Gold's unique because it combines exploration with near-term development. So it has multiple ways to creating value. It can drill more, it can build, it can join venture, it can partly sell some of the assets. So there are many ways. So in my opinion, it's less risky than those single outcome assets that are in the market. And the strategic location in this major gold belt is also really relevant, close to other developers that could potentially buy the assets.
Well, that's a great perspective to put into light, too. Now, you and I often talk about the moment when valuation alone is no longer enough and execution becomes that deciding factor. So looking at Desert Gold today, what operational milestones would give you the strongest signal that this company is capable of converting theoretical value into market recognition?
I think there are several points, actually. So the first drill results at Tiegba in Côte, that would confirm gold and bedrock. That would be a big point. But also drilling that expands or upgrades the resources in Mali. And of course, the progress on the mining plan. So, and finally, any steps that move ounces from potential to economic.
Well, Matthias, it's always a pleasure having you on the show with me. And, it's so full of insights all the time. So thank you again. And I so look forward to when you're back with us.
Thank you, Lyndsay.
Again, that was Matthias Greiffenberger, Senior Analyst at GBC AG Investment Research, a regular voice here on the Market Frontlines, breaking down the valuation dynamics and strategic positioning of Desert Gold Ventures this time, trading on the venture under the symbol DAU. Now, remember, these are the opinions of our own with possible vested interest in the company or companies we do speak about. Always be sure that you work with a licensed financial advisor and know your own risk tolerances. For a complete copy of our disclaimer, visit apiton.com and gbc-ag.de. I'm Lyndsay Malchuk with Apiton Media, and this has been the Market Frontlines. We will see you next time.